All right, so hello everyone. Thank you so much for joining us today. My name is Alexina Prather and I work with Access Helps. We are going to have a webinar today with Miami Open for Business. We have some representatives from the Miami Foundation and from Partners of Self-Employment. So we are going to get started shortly. I just want to ask that everyone stays on mute for the conversation. You can put questions in the chat as you have them. We're going to be answering them as we go, and then we'll have some time at the end for a longer Q&A session. But feel free to use the chat as much as possible. Feel free to introduce yourself, tell us a little bit about your business, and we will get started shortly. I do want to make a note that we are recording this webinar, so we are going to email this out to everyone that has registered. So if you know of someone who wasn't able to join us, they will definitely receive the link as well, and you'll be able to watch it back and hear any parts that you might have missed. So the recording will be available by the end of this week to everyone that has joined us today. And yeah, so feel free again, put your name in the chat, let us know who you are. Thank you so much for joining us today. And I'm going to pass it over to Maria. Whenever you're ready, you can take it away.
Thank you and good afternoon, everyone. First, again, thanks to Access Helps for hosting today. We really appreciate it. Thank you to all of you who are joining us today for taking the time to learn a little bit more about this program. We want to make this as informal and informative as possible for you. So I encourage you to ask any and all questions that you have in the chat. We will do everything that we can to get to all of those questions. And then, of course, we're also hoping that throughout the presentation today, most of your questions will be answered. So please ask all questions. Like I said, I'm sure somebody else is thinking it, just not asking it. So no question is a dumb question. So let's go ahead and get started. Today we are going to be presenting to you the ABLE loan. And this is one of the Miami Open for Business products. So just a little bit about the goals of the program. So we aim to support historically underserved small businesses and nonprofits in Miami-Dade County specifically. So this is open only to Miami-Dade County businesses with the underlying idea to build resilience and generational wealth through the purchase and ownership of business assets. So this is made available to us through a $20 million grant from Wells Fargo. Of course, not all $20 million are going to be made available through loans. We have multiple programs that we'll go over, but today we are concentrating on the loan program. So the core financial programs of the project in general are first the micro grants, and those are available to for-profits and nonprofits. That cycle has already closed, but we do want you to be on the lookout for the next cycle. This should open up early 2024. And as we move on with today's presentation, we're going to go over how you can sign up for our newsletter to ensure that you stay abreast of all the programs as they open and become available. The second program that was made available with this generous support of Wells Fargo is the ABLE loan. And this is basically an asset building loans for entrepreneurs. And this is available to both for-profits and nonprofits as well. These loans are anywhere from $5,000 to $100,000 and can be used for a wide variety of specific assets to be purchased. And we'll go into a little bit more detail about that as we move on, but that's what we're focusing today. And then, of course, there is a third product, which is the collective real estate ownership program. And this is specifically for collective real estate ownership. So more than one business coming together to purchase a location to co-locate a series of small businesses, whether that be two or more. And that program does have some very specific requirements around it, and we can provide you additional information on that program one-on-one after today's session. You'll hear a lot as we talk about the ABLE loan. You'll hear a lot about priority neighborhoods. And these are neighborhoods that have been designated as neighborhoods that are most in need. But we want to make clear that any business in Miami-Dade County, as long as it meets the other requirements for the program, are eligible to apply. So just because you're not in one of the priority neighborhoods, we want to make sure that you understand that you are invited and encouraged to apply. So as I mentioned, today we're going to concentrate on the ABLE loans. So let's talk a little bit more about that in detail. So as I mentioned earlier, these loans are anywhere from $5,000 to $100,000. $100,000 being the maximum loan that you can acquire through the ABLE Loan Fund. If you would like to purchase an asset that it costs more than $100,000, you would still be able to apply. You just have to show that you have access to the other funds, whether that be other debt capital, savings, other credit, so that you can actually acquire the asset. These loans can be amortized for between 1 year and 5 years. And when I say amortized, I mean repayment period. So you would have either be anywhere between 1 year and 5 years to repay these loans. That's based on a few factors. One of them being, of course, the dollar amount that you apply for and are lent, the actual life expectancy of the asset that you want to purchase, and you know, a wide variety of other needs, not to exclude cash flow and your ability to repay. For for-profit businesses, the interest rate on these loans is 3%. So well below the average of most small business loans, and definitely well below the average interest rate on credit cards and other debt servicers. And for nonprofit organizations, these loans are provided to you at 0% interest. All applications are open, so applications will be accepted. So the process is open and rolling through December 2023. And I will say here is that it is very early December, so about the end of the first week of December, so that we can have all applications reviewed, processed, and dispersed before the third week of December, which is when Maria takes vacation. So we appreciate you, getting your applications in early. And then loans, when at all possible, are going to be dispersed directly to the vendor. So those of you who have either taken a look at the application or will be looking at the application in the coming days, you'll notice that we ask you some very specific information about vendors. And that is because when at all possible, we'll facilitate the purchase directly through the vendor. If not, then funds will be dispersed to the client, and the client will have a series of days, depending on what the asset is, to acquire the asset and then show proof of the asset. For those of you who have not had an opportunity to take a look at the application yet, we do encourage you to do that. I have listed here the website. So the application in its entirety, from pre-qualification through submittal, can be done online without having to visit our office for any reason. Your first visit to our office will probably be for disbursement. And as the presentation goes on, we will take a look at the application site, and I'll also go over how you can obtain some technical assistance in order to complete the application if you need it. But for those of you who are on the call right now, it's miamiopenforbusiness.org, the site that you'll be going to. So I talked a little bit about criteria at the beginning of our talk today. And let's talk a little bit more in detail about that. So for-profit and nonprofit businesses that are located in Miami-Dade County can apply if they meet the other qualifications. So they must be owned or led by an individual or individuals from historically underserved backgrounds. And what we've identified as historically underserved backgrounds are Black, Latino, individuals who are of the LGBTQ plus community, veterans, or individuals with disabilities. I know that for a lot of government programs, being female owned and operated businesses qualifies as a historically underserved background. For this particular program, simply being female is not a qualifying factor. You'd have to fall into one of these other criteria. Businesses must have an annual budget or revenue. So for nonprofits, it's an annual budget. For-profits, it's revenue under $1 million. Businesses must be operational for a minimum of 2 years. And what we mean by operational is not simply registered on Sunbiz, but actually doing business. So transactions have to have been occurring for a minimum of 2 years. And then the business cannot be in what we consider a sin industry. And we have an exhaustive list of those sin industries on the website. But sin industries are usually adult entertainment, check cashing stores, gambling establishments. Those types of sin industries are not allowed. And if we go through anything, you've got some very specific questions about your business and whether or not you would be in a sin industry or anything like that, again, please put it in the chat. We're happy to answer. So let's talk a little bit about why a small business or a nonprofit should consider an ABLE loan. So a lot of small business owners or nonprofit executives, such as myself, are usually reticent about taking on debt, right? We're very conservative. We're not really looking for debt. We're looking more for grant capital, but there's some very specific benefits to taking on debt. And some of those specifically in this instance for the ABLE loan are the competitive interest rate. So for for-profits, you'd be borrowing at 3%, for nonprofits at 0%. A lot of small businesses and nonprofits need to either create a credit profile or need to enhance that credit profile. Because we do report to the credit bureaus, this loan will allow you to do that. Asset-based lending specifically in this instance is designed to promote increases in revenue. Or of course for nonprofits, increases in budget and cash flow. So the assets that are allowed under this particular program are specifically designed and were designed around helping a business get from where it is right now with revenue and budget to kind of closer to its long-term goals for revenue and budget. Of course, this helps businesses and nonprofits prepare for larger mainstream financing, because now you'll have some experience servicing debt, and you'll have some experience with the entire application process, which can be intimidating. But with a nonprofit like ours that's designed specifically for the purposes of assisting small businesses, applying with us won't get you, even if you're not ready or your application isn't complete when you turn it in, what you're not going to get is a denial notice, which is what a lot of times you would get from a bank. What you're going to get from us is training and technical assistance to help you get your application up to par so that we can complete a review. So while a loan is not guaranteed, what we can guarantee is the training and technical assistance that you need to, at minimum, complete the application. And then, of course, this particular capital can be stacked with other resources for further increasing your capacity. So as I mentioned, let's assume you want to buy a vehicle for your small business that costs more than $100,000 because it's some type of specialty vehicle. If you can prove that you've got access to the other dollars, in this case, stacked capital, so you've got additional dollars, you can use this to stack to those dollars to get you closer to that asset purchase. And we've talked a little bit about what is allowed on the ABLE fund. So let's get into a little bit more detail there. So vehicle purchases. This seems to be a relatively popular asset purchase request. So there are some specific requirements around each of these assets. So with vehicles, specifically, we're looking to finance vehicles that are going to be used exclusively for commercial purposes. And what we're looking at here is, does this vehicle make sense for your business? And we can go into some examples, but let's assume that you have a construction business. So if you have a construction business and you wanted to purchase a dump truck so that you can dispose of debris that's as a result of the construction, that makes sense for your business. And that's a vehicle that can be used exclusively for commercial purposes. We had an example of a business that wanted to purchase a Tesla for the purposes of delivering ice cream that wasn't something that we were able to justify. So a Tesla is not going to be used specifically for commercial purposes, or we can't guarantee that it's going to be used for specific, exclusively for commercial purposes. And we also could not justify the need of that type of vehicle to deliver ice cream. So hopefully that that clarifies that. Remodeling and renovation. So remodeling and renovation is another allowable asset. You'll hear later on in the presentation from two ladies who received ABLE loans recently, and both of them did remodel and renovation. So here we're looking for upgrades or redesign specifically for businesses that can show, one, that it's needed, and two, that will have access to the space for the life of the loan. So we're looking at either businesses that own the location that they're wanting to remodel or renovate, or businesses that can show that they will have access to that space. So what we're looking for is a long-term lease. If you're currently in a location that you would like to remodel or need to renovate, but you're not in a lease that extends beyond the maximum term, which is 5 years, if that's the term that you'll be requesting, now is a good time to start negotiating with the landlord so that you can get that lease extended and you'll be ready to apply. Inventory is an inventory loan is another allowable expense under the ABLE Loan Fund program. But here we're basically looking to finance the purchase of bulk goods that are going to be used primarily to fulfill larger contracts. So not necessarily the smaller amounts that you would buy monthly in your business to keep your business operating as it is right now. Here we're looking to finance larger amounts of materials or goods or the product that you're reselling that are going to help you fulfill a larger contract. So let's use an applicant, current applicant who actually may be on today's call, that'll be closing on his loan in the next couple of days. So a contract, individual received a large contract to place his particular goods in a supermarket situation. So this is beyond what he normally is doing. So he came with the contract, what it is that he needs in order to fulfill that contract. And then we were able to extend the loan using that contract as part of the cash flow analysis that we'll do to show probability of repayment. So while he wasn't able to show that he would be able to pay back the loan with his current cash flow, this being able to invest in these additional products is going to allow him to make the additional revenue that he needs. So we're able to finance his ability to meet that new contract. Predatory debt is the refinancing of predatory debt is also an allowable expense under the ABLE Loan Fund. For being able to use this particular loan fund for predatory debt, this isn't simply a let's pay off your business credit card. This is specifically to refinance predatory debt that was taken on to purchase an asset. So let's assume that you've got a lawn service business and you bought some lawnmowers at a very high interest rate. So let's say you bought some lawnmowers at 20% because you put them, or 23% because you put them on your Home Depot credit card because you needed the lawnmowers in order to fulfill your business. So now we've made available this loan, which is 3%, considerably less. We can refinance you out of that debt for those lawnmowers, taking into account a couple of things. One, do you still have the lawnmower? Two, the life expectancy of the lawnmower, and if that lawnmower is still has some depreciation, its life expectancy is beyond the term of the loan that you're requesting. And then how much do you still owe on the lawnmower? So if you bought that lawnmower a year ago and you've made 12 months towards that lawnmower, what we're looking at refinancing you out of is the existing predatory debt. So what you still owe on that lawnmower, not the total amount that it cost you when you purchased it, or the total amount that you have on the Home Depot credit card. It's specifically for that asset. So one, we need to prove that you still have it. We need to prove that it is still in working condition, that it is estimated that the life expectancy of the lawnmower is anticipated that it will exceed the life of the loan. And then the loan can be underwritten for the amount of the predatory debt that is still outstanding. So there we'll be looking at a wide variety of things to get you qualified under this scenario. We can also do succession financing. So succession financing is usually when a business is being sold from one generation to another within a family. So let's say mom, dad, grandma want to retire, and they have a convenience store, and they would like to sell that convenience store to a family member, which is like the son or the grandson or the daughter or the granddaughter. We can provide succession financing for that transfer, assuming that it is within family members, and that you've got some valuation, and that we know, what it is that you're purchasing, and how the business is going to transfer from one name to another. And then the last allowable expense under this particular product is a cooperative ownership conversion. So this is where an existing small business wants to sell its business to its employees and turn into an employee-owned cooperative. So this is where a small business is going to take a group of its employees and sell to that group of employees. And it'll be a shared ownership model. So we can also provide financing around that conversion. And financing around that conversion can be used for a wide variety of things, including valuation, actual purchase, etc. And this usually happens when a small business owner is looking to use their small business as kind of a retirement plan. So I see there's a lot of activity in the chat. We definitely appreciate it. We will get to all of your questions. So moving on. So we talked about what you can use this money for. Let's talk a little bit about what you can't use this for. So the ABLE loan is specifically designed to acquire the asset, to allow a business to acquire an asset that it did not have access to previously. So in financing the asset itself, we understand that there are costs associated with putting that asset to work, or being able to get that asset from obtaining it to actually generating income for your business. If those are specific needs that you'll have, we can have separate conversations about that. We can share some other access to other capital sources, but the ABLE loan is really designed to help you acquire an asset. The ABLE loan will not and cannot, in its design, cover what we would consider regular operating expenses. So staffing, even if it's a staff to actually put the asset to work, we cannot cover the staffing, training, utilities, anything that would be considered regular operational expenses are not allowed, even if those expenses are associated to the asset. And then, of course, because we have other programs that we talked about earlier, under the Miami Open for Business program, if an expense is allowed under one of those products, we cannot use the loan for it. So, for example, technology, equipment, software, or machinery, that's allowed under the technology and machineries grant program that very recently closed and will reopen in early 2024. So you cannot use this particular loan to cover those types of expenses. What you can do is you can, of course, stack capital, right? So if you are applying for a loan right now to buy, let's say, a truck for your business, but you are in need of some technology or machinery, when the grant rolls around again, you can apply for the grant to support the technology and machinery need that your business has. You just cannot pay for that with the ABLE loan. And of course, grants can't cover vehicles, inventory, or remodeling. And then this particular grant cannot be used, this particular loan cannot be used to purchase any real estate, because real estate is allowed under the CREO program.
Excellent. Maria, before we transition away from the reasons for taking out an ABLE loan, there's some questions in the chat. If you go back one slide, yeah, somebody has a question about succession financing. Can they get a loan to purchase an existing company if the seller of that company is not family related? Can we still finance a succession of business transfer?
So succession is usually generational, so it's businesses that are being sold by a family member to another family member. So just the actual purchase of a business would not fall under succession financing.
Great, thank you.
Any other questions on this particular? Usually this is a fun slide. No? Okay. All right, so.
Oh, there's a
now-
question
Go ahead.
from Mikhail in the chat. Mikhail would like to know if the loan can be used for strategic planning services.
So strategic planning services would normally be considered an operational expense, and we don't cover operational expenses with this particular loan. Now, if your strategic planning was around, let's say, cooperative conversion, and you were facilitating the kind of analysis around being able to convert a business to a worker-owned co-op, you could make an argument there that I'd be interested in hearing, but I can't guarantee that it would be financed, but it could be an interesting argument. Anybody else? No? Hearing none? Moving forward.
Wait, Maria, one question I see in the chat. This is gonna go back to succession financing. Someone has a question about how about an uncle to a niece for succession or buying out a family member's interest in a company?
Yeah, that's still considered generational. As long as we can track back the relation.
Awesome, thanks, Maria.
Sure. Nobody else? All right, so now let's assume that you've learned all about the ABLE loan and you've decided I am interested in applying. So how do I prepare to apply? As I mentioned, we'll go through the we'll click through the website so you can physically see what you'd be looking at momentarily. But there's some things that all applicants should put together or should have access to when they're preparing to apply. It will make the process a lot easier. And we have made this process as easy as possible, as understanding that this is a loan that you're applying for, and we need a lot of information so that we can do, all the fancy dancy math calculations that allow us to, do our best guesstimate on being able to get repaid. But we have simplified the process as much as possible. So in preparation, we want you to ensure, or we need you to ensure, that all the owners and the business itself meet the eligibility requirements. What we don't want you to do is to put a lot of time and effort into completing an application that we won't even be able to review. So make sure that you understand what all the requirements are, and then that you meet those requirements. Ensure that you have available to you the personal information, and that includes contact information, social security numbers, percent of the business owned. So all of the information for all of the owners. For nonprofits, we understand that there are no owners. In this situation, we will ask you, of course, for the applicant's information. And then as an attachment, we'll ask you for information on your board of directors. But for for-profit businesses, because those loans are personally guaranteed, so we're writing a business loan to the business, and then all of the owners are personally guaranteeing this loan in the event that something something unexpected were to happen, and let's say the business were to close, and the business would no longer have the capacity to repay the loan. Those business owners are then responsible for the loan. So we want you to make sure that you have all of that contact information for them, and their personal information. Make sure that all of the for-profit business owners have all their tax returns up to date, so that all their tax returns are completed and that you have access to those tax returns. We are going to ask you to upload those. So if one of your business owners hasn't done their taxes in the last couple of years, now is a good time for them to start working on getting those done. Make sure that all your financial transactions are recorded in whatever financial tracking software you may use, whether that be a simple spreadsheet, whether that be QuickBooks or Quicken, or if you've got an accountant, that your accountant has all of your financial transactions recorded, because we are going to ask you for a series of financial reports, profit and loss statement, year to date. We're going to ask you for your cash flow. We're going to ask you for your projections. And in order for you to have those things and have them be accurate so that we can analyze them, you're going to need to have all your transactions recorded. So now's a good time to get whoever's in charge of that at your business working on that. And then, of course, we need you to know exactly what the asset is that you want to purchase. So as part of the application, we're going to ask you for some information about the vendor. And then we're also going to ask you for a vendor estimate of what it is that you want to purchase. And if you want to purchase more than one thing, that's fine. We're going to ask you for the vendor estimates. And we do that because we are financing specific assets. We are not providing general working capital loans to a small business. So what we're financing is that specific asset. And then we will track that specific asset for the life of your loan. So let's assume that you are purchasing that truck for your construction business, and you are financing that truck for 5 years. So for 5 years, we're going to ensure, or we're going to follow up with you a wide variety of ways to ensure that that truck is still there, it's still operational. We'll use that truck as collateral on your loan. So we'll file all the appropriate liens with the state to ensure that that loan stays in, that asset stays in your possession and operating for your business for the life of the loan. So these are some of the things that we're going to ask you to prepare. This recording will be made available to you, so you'll have access to this as you start to prepare for your kind of application. So now let's talk about the least favorite thing, which is documentation. So this is a loan. And while we have tried to work on this application and make it as accessible as possible, we do need to get information that allows us to analyze whether or not this loan is a good risk. So we are going to ask you for some documents. It's probably the least favorite thing that any small business wants to do. We understand that, we can sympathize, but what we can do is help you and work with you and give you access to technical assistance if you need it in order to get these things done. So for-profits, we of course are asking for personal information on all of the business owners. So we're asking for IDs, their social security card, if they're not a US citizen or currently seeking status, any other similar identifying document that they may have. There is a personal financial statement document that we'll ask every individual to complete that is a business owner. We are looking, of course, for personal income tax returns. And then we are going to ask you to authorize us to pull transcripts from the IRS directly. So while we'll use your personal income tax returns that you submit to do kind of our initial calculations, we're also going to ask the IRS to verify the information that we have. And then for nonprofits, of course, because nonprofits are not owned by an individual, we're not going to be asking for these items. We will ask for a picture ID at closing, simply to verify the identity of the person that's signing on the closing document. But the rest of these personal identifying documents aren't going to be asked of a nonprofit. And then, of course, documents that are specifically related to your business, we will be asking these of for-profits and nonprofits. So we are going to be asking you to give us your proposed use of fund with vendor estimates. And your proposed use of funds is a document. It's a piece of the application where you're just going to kind of type and fill things in. So you don't have to, give us a separate document that you create. You'll just answer the questions on the site, but you will upload the vendor estimates. We are asking for your actual cash flow year to date. So for us, we're considering your year starting in January. So let's assume that you're going to apply in August. Your actual cash flow will be January 2023 through July 2023. That'll be your actual cash flow year to date. We're asking you for a balance sheet or your financial statements. We're asking you for your business bank statements. We're asking for proof of your business address. We need to verify that business is located in Miami-Dade County. We're looking at financial projections. For a lot of loans, financial projections are usually for the life of the loan. We estimate that anything beyond 12 months is really a guess. So we're going to ask you for financial projections for 12 months. If you're a nonprofit, what we will take in lieu of those financial projections are prospective donations or incoming grants that you can reasonably anticipate receiving over that 12-month period. So because your year to date goes January through July, assuming you're applying in August, then your projections would go August 1st, let's say, through July 31st of 2024 would be your projections, assuming you're applying in August. We are going to ask you for your business tax returns. If you're a nonprofit, that's equivalent to your Form 990. For small businesses, if your taxes are done on a Schedule C, that's fine. You can submit that. If you're a partnership and you've got a separate tax return, or you're a corporation and have a separate tax return, we'll accept those as well. So we're looking at tax returns for your business. We, of course, are looking for an active business tax license in Miami-Dade County and any other municipality where it's relevant based on the business that you have and where it's located. We're going to ask you for information on your employees. If you don't have employees, you are still welcome to apply. For the most part, most small business owners are employees of their business, at least part-time. So if you are working at your business, you would be considered an employee, and you could put in your information there. And then again, we're going to ask you for a Form 4506T, which we are supplying to you, which is the same as your personal. This just simply allows us to draw down your business tax returns from the IRS. So we'll use what you supply to us for our initial calculations, and then the IRS documents as verification. And then in addition to all the financial information that we're asking you for and the personal information that we're asking you for, there are 3 narrative questions that are going to be asked. So we've put in these 3 narrative questions specifically so that we do not have to ask you for a business plan. So this will take the place of a business plan. If you are going to concentrate and kind of devote and invest time in any one part of your application, we really encourage you to invest that time with these 3 questions. So these 3 questions are what are going to allow the reviewer of your loan to truly understand what your business is and does, understanding that while we are lenders, we are not experts in every field or every industry. So this is what's going to allow us to understand your business. This is going to allow us to understand your the reasons why you're looking to invest the funds, how those funds are going to increase your capacity in your business, and then of course any social impact or benefits that your business will have on the community, assuming that you receive these funds. So a lot of times people hear social impact or benefit and they immediately think I have to be giving something away. That's not the situation at all. Excuse me, I'm getting a little hoarse here. What we're looking at here is to understand impact, right? So, and the impact beyond the acquisition of the asset. So we know that your business is going to acquire, let's use the truck as an example. It's an easy one. We know that you're going to acquire that truck. That's not the impact that we're looking at. We're looking at impact beyond that. Are you going to have to hire somebody to drive that truck or two somebodies to drive that truck? Is being able to acquire that truck going to allow you to retain a job because you've got another truck that you have to phase out because it's just too old, costing you too much to maintain, or broken down beyond repair? Is being able to buy this new truck going to have a positive climate implication? So now there's going to be less emissions because this truck has some fanciness, it's electric or some such thing. So we're not really asking or anticipating that something's going to be given to the community as the social impact or benefit. We're just looking for you to describe the social impact or benefits that are relevant based on your business and the asset that you're acquiring. Another example of social impact or benefit is, will a neighborhood that did not have access to something now have access to it? So let's say that you are looking to your succession financing. So somebody had the question about succession financing. So your uncle is going to sell you this business, and your plans for this business are to open a second convenience store in a neighborhood that's currently a food desert and does not have access to those foods. That could be a social impact or benefit. So just an example. So shall I pause here for a second? Any other questions that we want to address right this second, or can we?
Maria, quick question on terms of the documentation required. The loans taken out by a nonprofit entity, are those also personally guaranteed, and in whose name would that be?
So nonprofits, because they're not owned by any one person, are not personally guaranteed. Now, a board will have to agree to indebt the organization, but they're not personally guaranteed. There is no owner.
That sounds good. Thank you.
So we're about to move on to the entertaining part of this, which is where you get to hear somebody's voice other than mine. If there are no burning questions that we need to answer, we'll go ahead and move forward, where you're going to be able to hear from two ladies who received a loan, and they can talk a little bit about their experience, answer some questions. So no burning questions. Let's bring up Tendra. So Tendra, who should be on and getting herself off mute, if I'm not mistaken, momentarily, is the owner and chef at Ten's Kitchen, which is a soul food restaurant in South Dade. They provide soul food with an island flair, currently operating out of a food truck while she is undergoing her renovation. And if you look at that picture on the bottom right-hand corner of your screen, that is renovation at its best. So Tendra, are you on the line?
Yes, I am, Maria. How are you? Hello, everyone.
Hi, Tendra. Thank you so much for joining us today. So as you know, we are hosting today's webinar with the idea of encouraging businesses that may not be confident in their want or need to apply for the ABLE loan, or maybe kind of unsure. So we'd love to hear a little bit about what your experience was with the application process, kind of what you thought of it, whether or not it was user-friendly. So take it away.
So for me, it was a little frightening because I had applied for a loan through, or tried to apply for loans for my business, and I was told that I wasn't eligible. I didn't have business credit and capital or collateral. So it was very, how can I say, a little nervous. I was a little nervous because for the amount that I was applying for, I thought that I would be able to do the renovations working and saving. And I had a situation that came about where I was introduced to PSE through another agency, and they were able to assist. And this was something that came up, and they told me, hey, kind of stick around and, check back with us. This was going to be coming about. And I did, and I the process I thought was gonna be harder than it actually was. It was not. It was fairly easy, being that I was operating and I had the majority of the documents and things that were needed to apply. So every time that they needed something, even if I didn't really understand, okay, this is what this is for, but I had certain things in place like QuickBooks that allowed me to give them a financial statement from this time, and then learning, with the help of Gilda telling me, hey, well, no, this, you have to do it from this date to this date. But with the process, it was fairly easy. I would kind of tell anyone that's on this call today that if you're having any fear of applying or not sure, just assess, what your business needs. And once you know what your needs are for your business, then you can assess, okay, well, this is the amount that we need, and these are the items that we need for the project. For me, it was renovations. It was a grease trap. It was ripping up the floors. It was plumbing. It was windows. It was a number of things that made me realize, like, this is an opportunity that I should apply. Don't be afraid, go ahead and give it a chance. And it was a success, and we were able to obtain the loan to get things completed. We're still completing some of the things that we applied for, so we're not 100% finished right now, but the process has been fairly easy. I would just say, if it's something that you feel you need, go for it. Go for it.
Thank you, Tendra. And in the interest of time, let's scooch on over to, oh, hold on, Maria's in the wrong place. Let's scooch on over to Rolanda. So Healthy Lifestyle Club is a fast food casual restaurant and mobile food truck located in Miami Gardens that provides light seafood, blending tropical and multicultural influences for a unique experience. And Rolanda's on the line with us. She also received a renovation and remodeling loan. And you can see some pictures on the lower right-hand side of what remodeling, kind of like her progress in her particular project, which is of course different than Tendra's. And Rolanda, will ask you the same question for, tell us a little bit about what your process was, how you made it through, any advice that you have for those individuals on the line that might be thinking about applying.
I would say pretty much of the same, just to go ahead and apply. Because majority of the items that they need, you guys give the format for how you want it turned in anyways. So if they have something that their accountant created and they have to come in and apply, you're going to give them the tools that they need to apply. That way they can go back to their accountant and have a sit down and get it done in the appropriate manner, which is easy for you and Ms. Hilda to see. I, for one, thought everything was over for myself. I went into a renovation and I planned on doing everything with the cash that I had already, and I thought that was enough. I did poor planning. So please get with your contractor and get proper planning for every item, detailed every item. I mean, a door, a rug, a chair, anything that your business needs, write it out first before doing a renovation. I closed my business and then did the renovations, which was completely backwards. I should have gotten the prices first and then closed the business when I had the total amount to renovate the business. So if you need a loan, do proper planning before actually getting a loan so that you can ensure every dollar that you get goes directly to the loan and it pays for exactly what you need so that you can reopen. I was about 90% completed with my renovation before I ran out of money and I had to go and look for a loan. And this entire process for me was 1 year and 2 months. So there was 4 months that I was down, that I could not generate any money. But since we got the ABLE loan, we are reopened. We reopened within 60 days of receiving the ABLE loan. We were able to finish construction very fast, and we are now open for business.
That's great, Rolanda. We're happy to hear that you're open for business. And of course, for those of you in the Miami Gardens area, we invite you to visit Rolanda's restaurant. So in the interest of time, we're going to go ahead and keep it moving.
Maria, I think you've muted yourself.
Maria did mute herself and then couldn't unmute herself. Sorry about that.
Thanks.
So review criteria. So loans are reviewed a few different ways. Loans are reviewed, of course, for compliance and against what the goals of the program are. And of course, you'll be able to review this on your own at your leisure. But understand that we're going to be looking specifically at representation from historically underserved communities. That's by the business owners and the staff. We're going to be looking at how these businesses are serving the community. Whether or not the businesses have the strong organizational and financial capacity necessary to service the debt that they're taking on. We're looking at whether or not these small businesses and the nonprofits are employer firms, and if they are, do they offer quality jobs? And you'll notice as you complete the application that we look at things like, do you provide benefits or discounted benefits? Do you provide on-the-job training? Do you provide paid time off or flexible schedules? Do you pay at least $18 an hour? So all of those factor into whether or not a job is considered a quality job. We're looking at whether or not this funding is actually going to help propel your business from where it is right now to where it is that you want it to be. And then, of course, we're looking at if you are in a priority neighborhood, which is not a requirement, but there are points assigned to priority neighborhoods. So this is the kind of first level of scoring criteria. The kind of next level scoring criteria is what I kind of call the meat and potatoes. So here we're looking at the loan underwriting. Here we're calculating probability of repayment. And we've designed this to be as fair and as open and as inclusive as we possibly can. Here a client can get a maximum of 163 points. Kind of 80 points is the magic number that we're looking at in order to be able to start looking at being able to provide a loan and then what dollar amount we can provide. So there's no guarantee that the dollar amount that you apply for will be the amount awarded, even if you are recommended for financing. But here we're looking at the general 5 C's, right? Capacity, credit, collateral. With this loan, we can be a little creative with collateral. We're looking at, we can take on the asset that you're purchasing as collateral. We can look at other business assets that you may have as collateral. We will not look at primary residences as collateral, so and usually shy away from real estate in general as collateral. We're looking at, of course, business conditions, character, and of course, the debt to income and collateral to debt ratio. Now, the good thing with this particular loan is the way that we've designed underwriting is even if you don't score highly in any one of these areas, no one area can automatically disqualify you from getting a loan. So let's say you have incredibly poor credit, but you can show capacity because you've got decent cash flow and you have some contracts coming in. What you're purchasing is something that we can take as collateral, like let's say a truck. You are going to be retaining jobs or creating jobs. So, you know, those business conditions and priorities are being met. Your debt to income ratio is okay. You could still get a loan. So no, not one of these areas is designed to automatically eliminate you or qualify you. It's a combination. And like I said, the magic number is 80, and there's a lot of ways to get to that 80 points in order to move forward. And I know I'm now speeding it up because Maria, being the chatty Cathy that she is running out of time here. We've got some loan scenarios here. And we were just basically here, what I'm trying to illustrate is what it is that you would pay. So let's assume $100,000 vehicle loan. Let's assume it's amortized at 5 years. For a nonprofit, you'd have to be able to show capacity to repay $1,667.67 a month. For for-profits, that's a little bit more at $1,796.87. Payments usually start 90 days from closing. And what that does is it allows a small business or the nonprofit to actually acquire the asset and put that asset to work in order to generate the income needed in order to help provide for the actual repayment on the loan. So we've got a few scenarios here that you'd be able to review at your leisure. And I know that we are pretty much out of time. I'm happy to go through the actual site after this if people want to stay on the line, but I do want to go ahead and give kind of an opportunity for people to ask their questions and get them answered. So do we have any questions?
Hello?
Yes?
I wanted to know if I know that there are the organizations that give the technical assistance to help us with the application. Are they there to like help us if we need help with projections and that kind of technical assistance? Or is it just making sure we have the documents in the way they need to look? And then I had another question about, it might have been answered, I don't remember, but I'll be quiet and take the, oh, and if we're, I've been in the process of having conversations with other organizations that have financing, and they ask if I'm seeking financing from anywhere else. So what happens if, like, how do I have multiple applications out hoping that I'll get awarded something? So how is that, how is that looked at from the application standpoint?
All right. So a couple of items. One, the technical assistance providers. So there's a link here. We've got the technical assistance providers listed on the website. For those of you that like to put a kind of a face with the name, this is who they are. And yes, they are there to assist you with putting together your financial projections, your cash flow year to date. So it's not about making it look like what we want it to look like, but actually helping you prepare the documentation. Some of our technical assistance providers are on the line today. So, hey, how you guys doing? And then your second question, which is having multiple applications out, because this loan is specifically to acquire an asset. Whether or not you have other applications out while we ask the question, it is not a determining factor on whether or not you get funded. What we're going to do is that truck that we're financing, we're going to take the lien holder position on it. And that's, so you're not gonna be able to necessarily get financing for that truck somewhere else, but you could get working capital financing somewhere else to help you put that truck to work. And it's not looked upon negatively. And actually, as I mentioned, you know, if you needed additional capital beyond what this particular loan could do, we could help make some of those introductions, which is why we mentioned that you should let us know that. I see like 83 messages in the chat, but I can't open them. So please kind of unmute yourself, ask your questions. We want you to leave here today as comfortable as possible.
There's a question from Mikhail around if you've already completed and submitted the application, can we request a consultation to get some assistance, making sure that all the materials and documents submitted comply?
You can. We have referred applications that needed technical assistance to technical assistance providers. If we've held on to your application, it's because we're relatively close to completing it, or it's still in review. But yeah, you're more than welcome to request a consult. And this information is also on the website, but there's 3 ways to contact us. There's an email address, there's a text line, and then there's a phone line. I encourage people to use the text line and the email. It is the quickest way to get a response. But of course, if you've got a burning need to talk with somebody, go ahead and use the phone line. Any other question? There's 87 things in the chat. Nobody has a question? I did a bang up job then.
You did a phenomenal job, Maria. There are just a lot of questions around eligibility, where else can people get loans, whether or not they are eligible, et cetera. And so great job. I think we covered everything.
All right, so for those of you who are interested in where else can you get a loan, we definitely encourage you to visit the Able Loan site. We've got some additional resources there. Reach out to us by text message. We're happy to answer any questions that you have, kind of forward you in the right direction, support in any way that we possibly can.
Great. Thank you so much, Maria, and everyone who joined in today, and to Tendra and Rolanda for tuning in and sharing their experience. We've shared this a few times, but we're going to follow up with a recording of the webinar within a few days. You'll have it before the end of the week, but all of the links have been shared as well, so you can spend some time on the website or reach out to the team directly for any questions. But thank you all so much. We're going to close out. We'll stay on for a few more minutes if anyone has questions, but we'll close out the room shortly. Hope everyone has a great rest of their day.
So for those of you who are hanging out for the purposes of just hanging out, I'll rob you of a couple more seconds of your time, show you the website. This is what the website looks like. We encourage you to sign up for the newsletter. And then we encourage you, of course, to take a look at the application. So you'll come to apply, you'll select Able Loan Low Interest Loan. You'll be able to learn all of the fun ins and outs of the application. A lot of the stuff we already went through. And then to apply, we've got an application for for-profit businesses and nonprofit businesses. So you'll be able to complete those applications there. And if you're needing some support, we encourage you to go to the Get Support tab, go through this program tab to get technical assistance directly from one of our TA providers. And then based on where your business is located, select the appropriate technical assistance provider and reach out. Or of course, you can always reach out to us directly and we can help put you in contact with them.
Right. Thank you so much, Maria. We really appreciate your time and all that you shared with us today. And we will follow up soon. Thank you all so much.
Thank you.
Bye.
Thank you.